This is Dan Dix here reporting for Press for Truth. Today is Wednesday, March the 7th, 2018, and joining me on the line right now is Daniel Ameduri of Future Money Trends, futuremoneytrends.com. Daniel, thank you for joining us. I've got a lot to cover today with so much going on in the United States. I wanted to get your views, first of all, right out the gate. This article just out 2 hours ago from Reuters says at midday, Dow down triple digits as Cohn exit adds to Wall Street trade war fears. Wall Street's main indexes fell on Wednesday as investors worried the exit of staunch free trade supporter Gary Cohn from the White House made the imposition of hefty steel and aluminum tariffs an eruption of a global trade war more likely. The Dow fell as much as 1% at opening before trimming some of those losses as markets again debated how serious Donald Trump was about a protectionist shift that economists say could damage growth worldwide. So what are your thoughts on this? Are we heading towards a global trade war here, or is Trump just posturing to try to force NAFTA negotiations?
You know, I think part of it is definitely negotiations with NAFTA. I think Trump's looking at the bigger picture here. Part of it is a campaign promise. He literally ran on this. There's videos of him back in the late 80s on the Oprah show talking about this. So this is something that he's been the most consistent on. As far as is a trade war going to erupt, I would say that as a person living in the United States, looking at what's going on with foreign subsidies to many business industries and sovereign wealth funds and all the different things that go on, the United States is up to its eyeballs in a trade war that's been going on for about 25, 30 years now. And this just happens to be the first time the United States is fighting back. And this is a very minimal thing too, by the way, steel and aluminum. It's not as if he's hitting 1,000+ goods like what happened right before the Great Depression. So, is it a trade war that we're in? Yes, but is it something that Trump's starting with this? Not at all. Mm-hmm. We've been at war for 25 years with China, Mexico, and the European Union for a long time when it comes to trade wars.
Well, speaking of China, I mean, how do you think they're going to react to this? I mean, we've already seen threats of retaliation from Canada, the EU, and particularly China. I mean, what do you think the reaction is going to be?
You know, what's interesting about China is I think the Chinese president and Trump did hit it off. And, the aluminum and steel imports almost affect China the least, affects Canada the most. And if he gets into car taxes and fees, which he's talked about, which will be next, that will affect the EU. So I don't know if China's going to have a big retaliatory strike. I think Trump and the administration is in talks with them from the reports that I'm reading. I think both countries might be yelling really loud, but just like with the North Korea thing, you've got Trump tweeting, you've got the North Korean leader tweeting, but here they are making more progress than that's ever been made in the last, 60 years with this country. You've literally got the leaders are meeting now. Trump has said he's recently open to meeting them in person, and it looks like the North Korean leader, Kim Jong-un's even willing to denuclearize. At least that's what's been said. So I don't know. I've become numb, and as I'm sure you are as a leader in the alternative media, everything Trump does, there's absolute hysteria. And I'll tell you, even if I didn't know anything about trading, global trade, and I'm not saying I'm an expert at all, but just by the fact that the experts and the entire establishment is against him on this, I've got to step back and say, wait a minute, if the entire establishment is against you, what are you doing right? Because the entire establishment came together for the Iraq War. They came together to give Wall Street $700 billion in bailout money after they had gorged themselves on profits from subprime. So whenever the establishment is together, it's never good. So, Trump's against the entire establishment right now. So even if you're not a global trade expert, you have to assume Trump is probably doing something right here.
Well, here in Canada, we're almost like the little brother of the United States, and anything that happens down up there really affects us here. So even today, the Bank of Canada announced that they're going to be keeping key interest rates at their target of 1.25%. What are your thoughts on that? It seems like a direct reaction to this trade war.
You know, a lot of times they might use the excuse of whatever the news story of the day. It's just like earlier talking about Reuters talking about the Dow was down 300 because Cohen resigned. I mean, look, as far as we know, the Dow could have been down 300 today, no matter either way, whether Cohen was there or not. You know, every time the Dow moves, and it's like this for any asset. If gold goes up $10, it's because of blank. Fill in the news story of the day. So I don't know if that was part of the trade war or if that was already baked in the cake and it was a good excuse. I mean, think about it. At some point in time, there'll probably be a major war that will break out, you know, and then the U.S. will say, well, look, this is why we had to monetize our debt, or this is why we had to revalue the dollar. This is why we had to give our bonds a 30% haircut, or whatever the excuse is going to be of the day. We all know that all these Western countries, from Canada to the United States, the EU, and even Eastern countries like China, all have massive deficits, major debt issues, especially in the United States here. We've got both public and private debt that is at records. And, you know, they're going to use the excuse of the day, the news of the day, for whatever is going to happen here. But look, the fact of the matter is interest rates are not going to go up in the West because there's too much debt. And, you know, in the United States specifically, you've got, you know, $350 billion going towards interest. If the interest rates go up just 2 or 3%, you could have nearly $1 trillion going to interest. Interest rates can't go up, not in the West.
Mm-hmm. Well, how has this been affecting the gold market? I know you're knowledgeable there, and I've been, you know, investing in that space as a hedge against a future dollar crash or something like that. So right now, it seems that gold is potentially going to see a spike. Or how do you see it playing out for gold?
You know, we're actually working on a very extensive report. It'll be up in the next 10 days. If you go to futuremoneytrends.com, it's a free subscription to the Weekly Wealth Digest. And we will cover gold in detail. And one of the things that I'm finding out from just doing all this extensive research on gold is that the institutional money is starting to nibble back into the gold junior space. And we're already seeing in the senior gold companies. So I think you're going to have a big move in gold here the last half of 2018. I think the next 90 days is a great time to be a gold investor because you're not going to see gold, you know, it's not really going to spike up and it's not going to go that much lower. It's going to kind of be stuck here right in this 1300 to 1375 range, although it hasn't hit 1375 yet, but I think that it may go that in the next 3-4 weeks here. But when you look at what the institutional money, and that is what ultimately will move a stock, that's what will move an asset space or a sector. So the institutional money is starting to come back into the gold space. They're starting to come back into the commodity space. So I think that would be the biggest bullish indicator and the reason for optimism in the gold sector. You know, the fundamentals are all there, right? Mm-hmm. The debt, the sovereigns, the inflation, wages are on the rise a little bit here in the United States. People are actually going to make more money because of the tax cuts. So they'll keep more money and spend more money. So price inflation is coming. Inflation is coming to the economy. So all the underlying fundamentals are better than ever. But if you really want to know what's going to happen to gold in the near term, you have to follow the institutional money. The institutional money, which has abandoned the sector, is starting to come back. And when they circle the wagons and they start to come in, as my friend Doug says, it's like the Hoover Dam trying to go through a garden hose because it's a very, very tiny little market.
Well, at Future Money Trends, you guys are constantly all about being 2 steps ahead. So I want to get your views on how people can go about doing that, or what are some of the steps proactively today that people can take in order to prepare for what's coming down the road?
I would say there's 2 very good opportunities right now in the gold space. And one I'm going to talk to you about, and I almost feel like I'm going to have to take a shower after talking about this because I referred to that it is a scam for a long time and never talked about it. And it's numismatic coins. So these are the coins that are, you know, pre-1933 gold 1-ounce coins. There's nothing special about them other than that they're pre-1933. Now these coins, when gold was $1,000, they fetched about $500 of premium. That's a really good deal. And right now, you have something that has never happened in the gold market. It's never, there is no other time to compare this to, but you can actually buy those numismatics for about the same price as an American Eagle, or even less than an American Eagle. My last purchase, I purchased a gold Eagle for $13.80, and I purchased a numismatic coin for $13.50. That means I was literally paying closer to spot for this coin that in a good gold market, even at $1,000, had a $500 premium. Now, I'm not buying these for the premium. I'm buying them for the gold ounce. The same reason why I buy the gold American Eagle, for the gold ounce. But here you have really no added risk at all. You're buying a gold ounce, and if gold goes up, you'll make the same amount as you did if you own the American Eagle, only you have a side bet. You have an option. You have a warrant practically on the gold coin, because if that premium comes back, because gold demand comes back, people worried about confiscation. And the premium on this, let's say it was at 50% at 1,000. Let's say gold goes to 2,000. You might have a 500 on the lowest end to $1,000 premium, and now you can sell that gold ounce and buy more gold ounces by flipping back into the American Eagles or whatever kind of bullion you want. So that's opportunity number one. That's just an odd thing that has come to the gold market where you see this. The second opportunity is in many of the gold juniors, because they've been you've already seen the big ones, the Newmont, the Merrick, the Barracks, the Franco-Nevadas. They're starting to move. The next wave will come to the juniors, and specifically they'll start moving once gold makes 52-week highs and crosses over 1,400, which will likely happen in the next 3 months here. So those juniors that have a lot of gold ounces in the ground, so they don't have a high cost because they're not out there drilling holes, but at the same point in time, they're also not depleting their ounces because they're not out there mining and not making money. They're just simply optionality plays. They have a lot of gold, nice gold resource portfolio, like a First Mining Finance or a gold mining. Those are the type of gold plays we're after, because when the gold price goes up, those tend to lead percentage-wise. There's a huge leverage on that. So especially if you see gold going to $1,500-$1,600 by the end of the year, those are the type of plays that could move even faster than the producers. So those are the two opportunities I see: the numismatics and holding some of these gold bank type plays where they have a mineral bank of gold sitting in the ground. And of course, you want to target companies like a First Mining or a Gold Mining because you want mineable ounces.
Well, I think that is excellent advice, and I'm wondering at this point if there's any similarities in of what can be done like that in the crypto space. Because I mean, there's been a bloodbath today. Looking at the coin market cap, everything is down. Does this present a buying opportunity? Do you think? Is it similar to this gold opportunity in the crypto space right now?
Well, anything in the crypto space is highly speculative. So let's get that part out of the way, so everybody knows. This is literally a new space. So just keep that in mind. Never invest what you can't afford to lose. Now, with that said, I have been a big follower and believer and advocate of Bitcoin since I first heard about it from Trace Mayer back in late 2011, early 2012, and Bitcoin, I think under $10,000 here. That's a steal. Did you just lose me on the camera?
I gotcha.
Okay, sorry, it went away from me. Anyway, so Bitcoin at around 10,000, Ethereum if you can get it under 1,000, and then one of our big, again, like an optionality play in the gold market. We are huge and aggressive accumulators of high blockchain technologies. It's headed up by Frank Holmes. The guy's running around like you've never seen an advocate for a company like this. And this is a very credible guy. He's made hundreds of millions of dollars. He's made himself a fortune and many others. He's tied into some of the best companies on the planet, like Silver Wheaton, like Gold Corp, U.S. funds, of course. He runs some of the most successful ETFs. And Frank is the chairman of Hive Blockchain Technologies. And he's one of their largest individual shareholders as far as a person. But Fidelity's come into that stock. They have a great partnership with Genesis Mining. And here's the thing. They've been mining, when these prices are depressed. So, and they're hoarding it. They're not selling. So when they hoard these new currencies, because they're sitting on $100 million, they don't need to use them for operating costs right now. They can, put these onto the open market when Bitcoin, say, is 20,000 or 25 or 50,000. And by the way, when they complete their new facility in Europe in September 2018, they will literally have the largest Bitcoin mining facility in all of Europe.
That's the Sweden facility that's currently being built?
Yes, and they also have facilities in Iceland that are mining Ethereum. I wouldn't be surprised at all to see this company make more announcements. This company is a aggressive growth mindset, very focused team. Partner with Genesis, partner with Fiore, and of course you have Frank Holmes as the chairman. You really couldn't ask for more.
Yeah, absolutely. I think he's brilliant. I've had Frank Holmes on to talk about Hive before, and I would agree. That's a good one to look into. And same with you guys yourself at Future Money Trends. I think it's important to pay attention to what's going on with you guys and the advice that you put out. So maybe you can leave us off today. Let people know how they can get in touch with you guys, how they can subscribe or learn more moving forward, especially in this turmoil economy that we're seeing right now.
Well, look, I started doing the economy and reports on YouTube as a hobby. I was always fascinated with business, guys. I share everything I've done to become wealthy. I share everything I've done to achieve financial freedom, to where I can travel with my family. And I've navigated it through the 2008 financial crisis and another larger crisis that we see coming down the road. You can subscribe to our weekly wealth digest free. Just go to the website futuremoneytrends.com and you'll begin receiving our weekly wealth digest immediately.
Awesome. Well, you heard it there, folks, and I strongly recommend it. Links will be located in the description below. Daniel, once again, man, thank you for joining us today.
Thanks for having me on, Dan.